Hello, hello. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of Intercipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's my position disclosure. I got out of my T-Triple-Q long today. I'll probably get back in on a dip. It's been acting as a great hedge, honestly. Some other positions have been able to trade it pretty well. Okay. Strong day for the market. Strong day for the market. We really glad to hear it, Jim. We broke out today in the S&P. Closed up 0.5%. The Qs are also up 0.5%, and they're sitting right on their kind of breakout level. The 625.50 has been important for it. And the IWM continued its weakness. So for the second trading session in a row, for the second trading session this year, the NASDAQ outperformed the IWM. So we saw a little rotation back into big cap tech and out of the small caps a little bit, which I think is healthy after such a big run that we had over that 14-day period or so. Starting with the indexes here, like always. So last couple of days on Thursday and Friday, we had really been discussing in the morning meeting this like 690 to basically the closing price of Friday the 16th, which is 691.66. Why is that important? It's a gap fill from the weekend before last when a lot of geopolitical things got churned up related to Greenland and additional tariffs and what have you that sent the market down. And then we had ourselves a little bit of a taco, and it took one day really got us very close to filling that gap, but I kept saying, like, in theory, if we have a full taco, then we should be right back to where we were, which is 691.66, and we couldn't quite get there. And then finally today, we broke back above, and as far as I'm concerned, the SPYs technically here are back into full-on bullishness. With that said, we are in the last week of January. We got a lot going on this week insofar as the real beginning of earnings season with a lot of major tech companies that are going to be reporting. We have the Fed on Wednesday, which will probably be a little bit of a non-event, but should still give us some volatility, and you never know what's going to happen during that Q&A, especially with the recent happenings that have been ongoing between Trump and Powell. So got a lot going on this week, and then we begin to get into February, where personally I'm a little bit more nervous about the market from a market dynamic perspective. But while the technicals are still full-on bullish and fully intact, there's only so worried that you can be. And that's pretty much where we are. So SPYs are looking great. The Qs, 625.50 was important. That was the original level that we had been looking at for the break of this wedge. It was silver breaking lows. It was a little bit disappointing back then. Just the wedge didn't give a huge resolution in one direction or the other. Same thing, broke down on the news with Trump and Greenland, broke back up, and now is also starting to look pretty healthy and pretty bullish, especially if we can really get above 630. Above 630, this thing's going to look phenomenal. But as far as I'm concerned, SPYs, Qs, full-on bullish. And the IWM, while it was very relatively weak on Friday, and it was relatively weak again today, that's a healthy technical pullback at this point from a massive start to the year that led to an extension shooting star, and now all that's happened is we pulled back to technical equilibrium. So this market here is looking really, really solid as far as I'm concerned. There's more new silver lows. So market continues to look great. Insofar as today, it was a little bit tricky because we had a flat open and we were kind of right in this rangy area with that same resistance kind of in front of us. Can we break above that resistance or not? And eventually we did. My focus today was very similar to the focus that I had at the end of last week, where I was really focused on that kind of like tech rotation trade where I wanted to see if Mag 7 could catch a bid. I wanted to see if software could catch a bid. And I wanted to see if semiconductors could be weak, especially post that Intel earnings report. And I do think we had some continued weakness in the semiconductors today. SMH is down 0.2% while the Qs is up 0.5%. So that's certainly relative weakness. SOXX is down 0.4%. So still getting some continuation of that weakness trade there. I'm still looking for a little bit more on my semiconductor shorts. I'm still short SMH. I'm still short SOXL. but I have also definitely done a good bit of covering over the course of these last few trading sessions. And then the other major focus, which was the major focus today, and was so crazy and a little bit difficult, but then we nailed it, was the silver trade. Silver gave the day 3 massive gap up that we thought could be a possibility. I was concerned on Friday, even as I was already short it seemed too early to me. I know that even Friday, let alone today, was the most extended silver had gotten off the ADMA at any point over the course of this rise. But the difference was these kind of last 3 pivot highs that silver gave, which by the way, all 3 of them closed at highs before the pullbacks occurred. But the last 3 pivot highs, each time when silver was looking like it was maybe going to go a little bit parabolic, they were all kind of like day 4s. Like a day 4 gap up, a day 4 gap up, a day 4 gap up, leading to a couple day pullback to the ADMA and then continuation. And Friday, on the one hand, was the most extended that silver had gotten so far, but on the other hand, was only a day 2. And then the price action on Friday was just extremely orderly on the bid. Just a very, very strong underlying bid that allowed for not even a lot of volatility on Friday, just a bit of a really big upside grind. And then today we had the big one. We had the really, really big gap up. And I was talking about this in the morning meeting. If you scroll out a little bit on this chart, this is what a parabolic chart looks like. The definition of a parabolic move in the market is the greater the price, the greater the demand. I love that definition because once upon a time I studied economics in college, and it just flies in the face of what you learn in economics. It's supposed to be the higher the price, the less the demand. But when you get a parabolic moves are typically brought on more by human emotion than actual fundamentals. The greater the price, the greater the demand, because as price goes up, the more people want in, the more people want to buy it, the more people get excited. But it's not sustainable. The thing about a parabolic move, though, is it's very hard to say exactly where the top is. You could say on Friday we were parabolic. Today we were parabolic. We could have closed at 105, gapped up to 120, and then sold from there. That was a distinct possibility as well. But silver, when we were doing the morning meeting today, per my analysis, was more extended than it's ever been in history, at least the history of the SLV ETF, times 2. And I went back and I did it on a percentage basis, not a dollar basis. I went back to the last, really big silver bubble that we had all the way back here in not 2020, in 2011. And I compared. I really zoomed in here, and I was studying this chart today in my morning research, and I was like, wow. I was measuring like different levels of extension here at these peak points on the way up, and on a percentage basis, where we were doing the morning meeting today, which what price? Where is it even trading at when we were doing the morning meeting? Let me double check that. I think it was still below 100, right, or about 100, I guess. About 100, a little bit underneath it. The extension in silver today was double the extension that it hit at any point in 2011. So I felt it was really close. But like I was just saying, when it comes to these parabolic moves, you can always get more irrational, right? So it wouldn't have been impossible, like I just said, for us to close at 105, gap up to 120, and then be done. But we just recognize that the move is hitting the point where it's becoming unsustainable. And we recognize that if you can capture the short, the risk reward is going to be phenomenal. And the difficult part, where'd my light speed go, is going to be in the execution of the trade. It's going to be finding those executions. And there was a lot of opportunities that we called out kind of on the way up, and I stand by every single one of them as a good trade, where we would find these little spots. Like I remember Josh right in the beginning of the day calling out the short back through 100 on the second 5-minute bar. Short back through 100 versus the high, you got 20 cents risk, maybe 50 cents if you wanted to give it to the pre-market high. Silver's still going down. I just covered a little bit more. Maybe 50 cents if you want to give it to the pre-market high, right? And that trade with that small amount of risk is going to be kind of a low probability of success, especially something that's gone up so much, that has so much firepower underneath it, that is in the process of going parabolic. There's a really good chance you're putting on this counter momentum trade. There's a really good chance that you're going to get stopped out of that. But if you can get it to work, if you could take that trade that Josh called out and have 20 cents worth of risk, and then the sell-off happens that we are literally experiencing right now as we're doing this afternoon meeting, and it brings you to $95 worth of trading right now, or if it brings you down to the 80 EMA on the daily chart, which is at $87, let alone the 21 EMA on the daily chart, that risk reward is just phenomenal. Like, those are the type of risk rewards that we need to live for as traders. Like, you can come in with 20 potential cents worth of risk, and you can make $5, $13, $23, all as a possibility, just on a technical pullback on the daily chart of the extension from the parabolic move. Like, that's the trade that we want to be all over. So I was trying to call out, almost at risk of churning a little bit, but I was trying to call out every small opportunity that I felt was there, because I felt that every single one of them was worth it. Almost worth it to even churn a little bit, because if you could nail it, the risk reward is just going to be so phenomenal. Take the trade that Josh called out. I think I had one or two here on the way up that did not work at all. Then we had another call out off the 1020 high that worked more than enough to get the risk covered. Then we had a call, I think, off this pivot high at 1115 with the little volume increase, worked enough to get the risk covered. I think there was a little short call out right here on this RDR for like 10 cents worth of risk, a 5-minute RDR for this time of the day for the pullback, enough to get the risk covered. And then finally, we recognized that finally this thing was accelerating to the upside, and we nailed this call at the top when it actually happened. So the bottom line is, there might have been one pre-market trade that was break even. I'm actually going to try to count them. One pre-market call out that was break even. Josh's call out was a break even. This one was a break even. This one was a break even. This one was a break even. 5 break even trades, probably 2 outright losers that were called out. And then finally, if you actually nailed this one with the right execution, with the right price, well, I just got filled on the bid at 94.51 right now as we're having the conversation, right? And that is exactly what exactly what we were looking for. These opportunities don't come around a lot. They're not always easy. I wouldn't describe this as easy. They squeezed this, and I think I even said it at one point when I was on the radio. Like, I've seen sometimes in these situations, especially if there's shorts that are getting squeezed, where these things will squeeze for even half a day before they actually break. And this thing didn't break until just after 1 o'clock. It finally broke. It broke hard. And we've got a nasty looking candle. And one of the other signs that really had to have you paying attention to this, that we noted very early, was just how big this is a 15-minute chart. How big and how consistent the volume was. Look at the daily candle. Look at the volume on this daily candle. It's absurd. It's absurd. And that means something. And it was also a telltale sign here. Look how big this volume was on these 2 5-minute candles when we finally broke. That was the signal that you could really finally be looking to push this to the downside in a very big way. And that was it. This was my focus pretty much the entirety of the day. Was really focusing on silver, the miners a little bit. I actually felt like I missed a couple opportunities and some other things. Oh, and the other one that was actually saving my ass while silver was running was the quad U idea. So USAR, Quad U, MP, UAMY, UAMY, all gapped up really big today on the news that it looks like the United States government is going to take a stake in USAR. So, and we kind of thought that maybe that was actually going to be coming at a certain point as well, and we saw that really large order option flow hit just a couple trading sessions ago. I'm not going to say if there were any potential leaks out of whichever person in the government is saying what companies that we should buy, but it sure certainly seems like it. But the idea here was, okay, so now we know there's been a speculation for months, going back honestly to like September and October, when the U.S. government first bought a stake in Intel, that they were going to do something similar potentially with one of these rare earth companies. And The question was going to really be which one. Quad U, which has been a consistent short focus of mine ever since this move back here in October, is actually a Canadian company. So I didn't think that that was going to be it, which made me feel a little bit more comfortable being short this one. And for a while, I was short Quad U while being long MP, kind of as a pairs trade, and then MP got to my target, and I got out of it. But now that the news is actually out and it's going to be USAR, it didn't make any sense to me that they were gapping Quad U up for a big day 4 back into the previous resistance of its all-time high. It didn't really make any sense to me, though I didn't focus on this one, that Uami would gap on it either. Because there's a premium that these stocks are trading at on the potential that they might be the one that the U.S. government wants to take a stake in. And on top of that, they're technically extended into their day 3 gap up. So really, really liked those as a short today. It was one of my favorite ideas. And it worked phenomenally well. So this trade was kind of saving my butt a little bit, honestly, because I still have some silver swing on that was just ripping in my face. Obviously, at certain points in the day today before we actually broke the commodity, but before the pro desk broke silver down. So yeah, I guess that's pretty much all that I've got. I think that we kind of covered everything there. I am happy like always to answer any questions. I need to get some sleep tonight. I started way too early this morning. All right, not seeing anything here in the VTF from Greg. I stopped out 5 times. My rule is 3. I hit 400 last time AGQ on the way down. Oh, let's go. You caught it? Oh, you got stopped. So you bended your rule a little bit? Greg, the one thing that I would say maybe you want to consider about that rule, I get the rule, and I think that rule makes a lot of sense so that you don't churn. And first of all, silver was a very unique circumstance today. I don't think I have ever said before, or probably anybody has ever heard me say before, it might be a good idea to churn this one, just because the risk reward is so good. But the other thing that you maybe want to think about is if you get the risk covered and then you get stopped out, personally I wouldn't count that as one of your times. Again, your rules for your trading, but if you got your risk covered, that's a break-even trade. I wouldn't count that. I would almost say my rule is 3 like outright losses, and then I know that my head is just not in the game when it comes to this stock or ETF or commodity. So and maybe that helps. Okay, hold on. From Jim here, from Greg here. In that case, I did get the risk covered a couple times, so there we go. Awesome. From Jim, how much do you risk in terms of percentage of equity on a setup like this? I know it differs a lot amongst traders depending on risk tolerance, but curious your take. Those questions are always really hard for me to answer because I don't just base it necessarily on my account. I kind of base it on other money that I know is available to my account because I don't necessarily keep all of my trading money in my account at all times. And if anything, that's one of the benefits of working with T3 is because of the leverage. Like, I'm going on a little bit of a divergence here on the topic, so I'll just say this quick. People join T3 because they get a ton of leverage because they want to get bigger and size up. That's a big reason. People will also join T3 because they want to trade the same but have more access to liquidity. So let's say that you had $1 million in your retail account and you joined T3 and you put $100,000 in. You could be trading the same book size, but just have $100,000 posted, and now your other $900,000 that you were previously using for trading at your retail account is just kind of more free liquidity that's a little bit more open for you. The question is, like, in the back of your head, is that $900,000 still count as your account when you're thinking about how much am I risking as a percentage of equity on a setup, or is it just purely going to be the $100,000 number? So for me, like I'm risking like a very significant part of my account in silver, like a kind of what might sound crazy, but with an understanding that there is kind of like more behind it, if that makes sense. To the point where I would almost rather not directly answer the question, but I think it gives you kind of an idea. But either way, I'll just say a lot. is going to be the answer on that, because I just don't think that those setups come around that much at a certain point. And I was trying to really, I've been short silver for a while, and just really trying to manage my sizing the entire way up, right? And that was the biggest reason why I really finally started to get hurt on this Friday through today at highs on the swing portion of it. But the rest of it, even, technically I started my short that I've never fully gotten out of, I think on this day, in the upper 60s, maybe $70. So technically this thing was 36% against me at highs. But the stock that I had at 70, I no longer have, right? I was able to kind of massage this trade where on these bigger pullbacks was getting out of very large percentages and then adding on the way up and then getting out of like a large percentage. This time I did less though, because I remember on this time I was looking for a deeper pull, which meant that by the time we had Friday come around, that I was actually really starting to get hurt. But I kind of believed that we were close, so I was really trying to push the trade. So I hope that helps. Kevin thoughts on CHYM. Looks good. I haven't looked at this name in a while. Just a clear, clean breakout at 28. You might be able to get a jump start at like 27 quarter. Daily chart looks good. Silver still going. I don't think that we lost sound. Did you guys lose sound? Just gotta check something on this trade real quick. SLV. Where do I want to go? No, can't be right. Maybe it is right. Okay. You guys lost me? In the VTF? Huh. I'm getting an error. Give me 1 second. Yeah, I gotta ask everybody in the VTF to switch over to the YouTube to continue to listen, because I don't know, getting a weird error on the microphone, really weird error on the mic on the VTF for some reason. But there was no other questions in the VTF. So over to the YouTube from Scott. Yep, silver selling after hours. I showed up to the silver short on Friday and started to build the position. It about shook me out today. Yeah, it was a little rough at highs. It was a little rough at highs before that signal came in. But I knew we were going parabolic. It was a tough trade for sure. Can't believe the volume. Yeah, the volume is so crazy today on that. It was an A setup today. Awesome. Great job, Scott. From Giancarlo, what did they call? Why do they call it a taco when all he does is make deals? The president doesn't chicken out. They do. So why taco? I use that for lack of a better term, honestly. You think is it just because they just can't give credit for anything? So I just use that as lack of a better term, for lack of a better term, whether it's taco or a deal or whatever. I don't want to get into the politics side of it, but the term for Trump saying that he's going to do something and then for one reason or another it not happening, whether it's because our side caves or their side caves or a deal gets made or whatever, that's just kind of become the term. So it's just easier to use. So that's why I'm using it, and I'm really not trying to be political with it, trying to stay apolitical with it. So beyond that, you'll have to figure that one out yourself, I think. Cool. You guys could still hear me. From Cyril, is there a rotation from the IWM to tech? The last 2 days there has been. It's been like a mean reversion of the reversion type of situation, which makes sense. If you read the research that's come out from Goldman Sachs, they expect that the IWM and the S&P is going to end up performing in line over the course of the year, which, may or may not happen. It's very, very early in the year. But if they're correct, if Goldman Sachs is correct about it, it means that eventually, you're going to be taking turns where one is going to be outperform the other, and then they're going to go back to each other. So, the IWM vastly outperformed the Qs for 14 days in a row, having a couple of days of the Qs outperform the IWM, and just reversing the rotation makes sense. The dispersion right now overall in this market is just, it's absolutely and utterly massive. So I just covered more silver. Seeing another one here. Give me 1 second, Scott. Thoughts on CoreWeave? Yeah, so CoreWeave was one of my ideas of the day today. I did not trade it though. I like CoreWeave long versus 99.50 off of the NVIDIA headline, and it was really strong at the beginning of the day, and I guess they faded it really hard. I don't like this close. I don't like this upside tail on this close on this. I think that if the news is going to be significant for the stock, that it should have been able to close above 100 today. So the close makes me definitely take some pause on that. I don't like how the candle looks. All right, folks. It looks like I got through all the questions. Looks like we covered the important things. I'm going to wrap it up there so I can go back to managing this position a little bit. Have a great night. I'll see you all tomorrow.